Money Watch, a wild ride on Wall Street today. Most of us saw the alerts on our phones. The Dow dropping sharply and then pulling back up again to close the day down 1,175 points. CBS 4's Nikki Battiste takes a look at what happened.
The Dow went into a free fall midday, plummeting almost 1,600 points before rebounding some. The big drop comes on the heels of the worst week in the market in more than 2 years and Friday's major sell-off. Economists say investors are nervous about inflation and interest rate hikes.
One of the jobs the Federal Reserve has is to contain inflation when it starts to bubble up. So if we start to see inflation, what the likelihood is the Fed will raise rates faster or more often than we're anticipating.
The Federal Reserve triggered a downtrend early when it hit Wells Fargo Bank with sanctions for opening millions of phony consumer accounts. Wells Fargo fell sharply and other banks followed suit. But last week's good news of jobs and wages picking up, the very things that make for a strong economy, are also what make investors skittish.
Unemployment claims have hit a 45-year low.
Deputy White House Press Secretary Raj Shah said in a statement, markets fluctuate, but the fundamentals of this economy are very strong, and they are headed in the right direction.
Repeat after me.
It was quite a welcome for new Federal Reserve Chairman Jerome Powell, sworn in just hours before the markets started falling. Some experts won't go as far as calling today's market plunge a crash. They say the market took on a mind of its own, sending Wall Street into a tizzy. Elliot?
It was pretty scary today, Nikki. She joins us now from New York. Is the consensus on Wall Street that today's drop is the result of rising interest rates and inflation only, or could there be more to it?
Yes, fear of rising interest rates was a key factor in the market tumble, but it did start with inflation concerns. For consumers, inflation, of course, means things cost more. But in the investment community, worry over inflation bubbling up comes from the likelihood that the Fed will raise rates faster and more often than investors are anticipating. The inflation concerns started after Friday's monthly U.S. jobs report, like I mentioned in the piece, showed that average wages surged 2.9% in January from a year earlier. That's the sharpest year-over-year gain since the recession. When interest rates go up, that means the cost of borrowing money for companies rises, and that's not good for corporate America. If investors think interest rates are going to increase in the future, that rattles Wall Street and investors sell. The sell-off started Friday and continued today, as we saw. Elliot?
And do experts say this could be a sign of things to come after a market that has risen so drastically over the past year?
Experts say, no one can predict what the markets will do day to day. Today, we got a sense of the velocity on the downside. But before the last two trading sessions, we had not seen a 5% drop in the market for 2 years. That's a really long time. Some experts say the markets were moving too far, too fast, and this is the price we pay. They also say we've been here before and will bounce back. But for now, hopefully, we're all going to ride this out. Elliot?
And what about people looking at their 401k? Should they consider readjusting their investments or maybe just not looking at it every day?
It's a question we're all asking. Experts are saying it's going to be a bumpy ride, but if you are a long-term investor, don't touch your 401k. If you will be in the market for 5 years or more, stick with the game plan. But if you have a bill to pay in the next year, like college tuition or you're buying a new home, get that money you need out of the market right away, but no more. I don't know about you, but I think I'm going to avoid looking at my 401k. Don't want to see all of that red. Elliot?
I think I need to do that as well. Nikki Battiste joining us from Wall Street. Thank you very much, Nikki.